This is Nightly Business Report with Bill Griffith and Sue Herrera.
Trade hopes, optimism that the U.S. and China will find common ground spread from the G20 meeting in Buenos Aires all the way to Wall Street.
Hotel hack. As many as 500 million people had their personal information exposed, ranking this among the biggest breaches ever.
Spending spree, why our market monitor is betting on a jolly holiday season for the digital payment stocks. Those stories and much more tonight on Nightly Business Report for Friday, November 30th.
And we do bid you a good evening, everybody, and welcome. The startling headline that we all woke up to this morning involved that massive breach at a major hotel chain that exposed data of 500 million people. And we will have much more on that story in just a few minutes. But we begin tonight with the stock market and the cautious optimism that lifted share prices late in the day. There are reports that the U.S. and China are inching towards some sort of de-escalation of their trade tensions. There's also still a lot of skepticism. The key meeting occurs tomorrow when President Trump has dinner with Chinese President Xi at the G20 summit there in Buenos Aires. And it was hope about that meeting that sent the Dow to its highs for the day at the close, up 199 points. It's at 25,538. The Nasdaq added 57. The S&P was up 22. And believe it or not, the major indexes all finished this volatile month with gains, thanks to this week's huge rallies. But the same cannot be said for U.S. crude oil, which declined more than 20%, its worst month in a decade, while natural gas prices climbed more than 40%, its best month since 2009.
While trade was in focus at the G20, it wasn't all about relations with China. An important new deal was signed with Canada and Mexico. And as Eamon Javers reports, there were other notable moments as well.
A whirlwind day of economic diplomacy in Buenos Aires as world leaders gathered at the G20 for high-stakes negotiations and some telling personal moments. The day featured a bro hug of sorts between Vladimir Putin of Russia and Mohammed bin Salman of Saudi Arabia, who was recently accused of ordering the murder of a Saudi columnist. At the signing of the new Canada-U.S.-Mexico trade deal, Canadian Prime Minister Justin Trudeau pointedly declined to hold up his copy of the agreement despite prompting from the other leaders. In the wake of the layoff announcement by General Motors this week, President Trump touted the benefits of the new North American trade deal for auto workers.
This will help stop auto jobs from going overseas, and it will bring back auto jobs that have already left.
But the Canadian leader used the event to press Trump on tariffs he's put in place.
The recent plant closures by General Motors, which affects thousands of Canadian and American workers and their families, are a heavy blow. And Donald, it's all the more reason why we need to keep working to remove the tariffs on steel and aluminum between our countries.
But Friday was just a preamble for the main event, a dinner Saturday between Trump and Chinese leader Xi Jinping, possibly to decide the course of the trade war between the two superpowers.
We're working very hard. If we could make a deal, that'd be good. I think they want to, and I think we'd like to, and we'll see. But we'll be meeting with President Xi in a little while. But for the most part, tomorrow, I would say, would be our big meeting.
Behind the scenes, officials cautioned that the president feels no urgency to cut a deal this weekend. He doesn't feel pressure to make a deal for the sake of a deal. He has more time, a senior administration official told me Friday. He's been getting information from advisors that the economy continues to show resilience and strength despite the equity markets. But one scenario that seemed possible heading into the weekend was a kind of a squishy positive outcome in which there's no formal deal announcement, but perhaps an agreement to continue talking, maybe even the United States holding off on the planned tariff increases on January the 1st. Of course, everything is going to come down to the two men at the dinner table on Saturday night. For Nightly Business Report, I'm Eamon Javers in Buenos Aires, Argentina.
Meantime, Beijing has its own trade strategy heading into that upcoming meeting between the U.S. and China. And our Eunice Yoon has that part of the story from China.
China doesn't want a trade war and is putting on its game face. At its regular press briefing, the foreign ministry said China hopes the U.S. will show sincerity at the G20 and meet Beijing halfway in their negotiations. The Chinese state media went one step further, recommending that the Trump administration give its winner-take-all approach the weekend off. The hope here has been that Washington could hold off on tariffs maybe till the spring, and that the two sides could come up with a trade framework or architecture which would include issues the U.S. wants China to address, like forced technology transfers and subsidies to state-owned enterprises. However, the inclusion of White House trade advisor Peter Navarro at the dinner between President Trump and President Xi isn't being received well here in Beijing. Chinese officials have had strong reservations about Navarro in the past and are suspicious that, as a China hawk, he's not so interested in a trade deal as he is about containing China's rise. In the run-up to the G20, China's business people who I've been speaking to say that they're pessimistic about the prospects for a trade deal. Many of them say that they don't believe that China is going to be willing to make the concessions to its industrial policies that the U.S. wants. One executive told me that winter is coming and that he's preparing for relations to turn even frostier. For Nightly Business Report, I'm Eunice Yoon in Beijing.
Now, you might be wondering which companies have the most revenue exposure to China. According to Strategas, the top 3 S&P 500 companies are manufacturing firm A.O. Smith, fiber optic cable manufacturer Amphenol, and semiconductor firm Broadcom.
Now to the Fed, which of course has been a big focus for investors this week. Today, another Federal Reserve official said that the central bank should not be raising interest rates right now when job creation is strong and inflation is under control. During an interview this morning, the president of the Minneapolis Fed made his case for pausing rate hikes.
If the U.S. economy is creating 200,000 jobs a month, month after month, we're not at maximum employment. And so that's the continued surprise, and that's been leading me to take my policy position. So is it?
Mr. Kashkari added that hiking rates too forcefully could trigger a recession.
With investors focused on the Fed and on trade, many are trying to figure out what those two issues could mean for 2019 and earnings in particular. Bob Pisani is at the New York Stock Exchange tonight.
The new year will be here before we know it, and a good part of 2019 earnings expectations could depend on a tariff deal between President Donald Trump and China's President Xi Jinping. So now that the highly anticipated Federal Reserve speech is out of the way this week, the G20 summit is now underway, the market can try to look ahead and decipher earnings estimates for next year. Now, Fed Chair Jay Powell's speech on Wednesday removed some uncertainty about rate hikes, but there's still a lot of murkiness around several issues on tariffs, higher business costs, and global growth. So predicting earnings in the next year is never easy, but it's been almost impossible for 2019, and that's why the markets have been so volatile. So according to one estimate, S&P earnings are expected to increase 8% next year compared with this year's 23% gain. But remember, that 23%, about half of that was due to the effect of tax cuts. Morgan Stanley, they're even less optimistic. They say actual corporate profits will only be up about 4% next year. Still, the markets rallied this week because there's one less thing to worry about, an aggressive Fed. But worries about tariffs, the input costs, slowing global growth, they're not going away yet. Now, it's going to be hairy going into the end of the year, but hopes for a Santa Claus rally could depend very much on tariffs. Nick Raich from Earnings Scout says everyone is betting the economic upcycle will be over in 2019. The way to keep it going is for the Fed to pause and then for the president to make some kind of deal on China. So right now, let's say it's one down and one more to go. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
Time to take a look now at some of today's upgrades and downgrades. We begin tonight with shares of Goldman Sachs, which were downgraded to neutral from buy at Bank of America Merrill Lynch. The analysts there cited concerns around that scandal involving the Malaysian Government Investment Fund, which is seeking a refund of fees that it paid to Goldman Sachs for deals that raised billions of dollars that were later stolen. The price target is $225. The stock fell 2% today to $190.69. Under Armour was upgraded to market perform from underperform at Wells Fargo, with the analyst saying that after 2 years of choppy performance, the worst may now be over for that stock, and the price target is now $23. Shares closed right around that level at $23.88 today.
WWE was upgraded to overweight from neutral at J.P. Morgan. The firm cites the stock's valuation after a 26% move lower from its peak. The price target is $87. Shares rose more than 2.5% to $73.96. Starbucks' price target was raised to 76 from 66 at Jefferies. The analyst cites its business in China. The firm maintains its buy rating on the stock. Shares, however, fell a fraction to finish at 66.72.
Still ahead after that massive data breach at Marriott, which industries are most protected from a hack and which remain most vulnerable?
Microsoft is the largest publicly traded company. After battling with Apple for the top spot all week, today it closed ahead of the smartphone giant. As it now stands, Microsoft has a market cap of $851 billion. Apple's is $847 billion.
Marriott disclosed what could potentially be one of the largest data hacks in history. The world's largest hotel chain said about 500 million guests may have had their information accessed as part of a breach into its various Starwood properties. And that sent the stock down about 5.5% in today's trade. Aditi Roy has details for us tonight.
The breach is one of the largest in U.S. history, behind the Yahoo attack, which affected 3 billion users, and bigger than the Target hack, which involved more than 100 million. It dates back 4 years and involves personal information, including passport numbers, names, addresses, and itinerary details. Some also had credit card information stolen. Marriott says the hackers targeted the guest reservation database at Starwood hotels, which includes brands like Westin, Sheraton, W Hotels, and the St. Regis. And that's not sitting well with a lot of travelers.
I typically book online or with an app. And so, yeah, the data breach does concern me a little bit just because they have all my data.
Passport's a little bit more worrisome because if you get a passport number, who knows where that's going to go. So not sure what to do about that.
In a statement, Marriott's president and CEO Arne Sorensen says, "We fell short of what our guests deserve and what we expect of ourselves." But some call the timing curious. The unauthorized access began in 2014. Marriott acquired Starwood 2 years later. Cyber experts say the timeline could indicate the perpetrators had access to a lot more information than the company realizes.
It tells you that you have a pretty sophisticated actor here.
While many analysts say the long-term consequences of the breach are still unclear, a Moody's analyst warns longer-term risks include any concerns guests may have about staying at a Marriott property. The attorneys general for New York, Maryland, and Illinois are launching investigations, and Senator Mark Warner also chiming in, calling for laws that ensure companies don't keep sensitive data they no longer need. For Nightly Business Report, I'm Aditi Roy, San Francisco.
So given that massive data breach at Marriott, are there industries that are more vulnerable to being attacked than others? We're joined tonight by Sumit Agarwal, the co-founder of the cybersecurity firm Shape Security. Sumit, welcome. Nice to have you here.
Likewise, Bill and Sue. Nice to be here.
You say that there's been a huge technological shift over the last 10 years, and basically security at many firms just hasn't kept up with the move in technology.
That's very true. If you think about, as consumers, our lives have become more and more digital. The promise of the internet is something that we're now enjoying in full, but the reality is that as an overall society, the combination of government, law enforcement, technology providers, and the big internet providers, we haven't done enough to keep companies safe and secure. So these hyper-sophisticated attacks like this one are going to happen more, not less, in the coming years.
Now, when we talk about data breaches, I think we were most concerned about banks, the financial institutions where our money is. But you're more concerned about other industries. Why? And who are we talking about here?
Well, that's a great question. The reason that the banks are the most secure is that they've been attacked for the last 3 decades. They were being attacked well before the internet enabled some of these more modern mechanisms of attack. And so the industries I'm most concerned about are the ones that are newer to the reality of facing global cyber criminals, global criminals in general, or the ones that are beginning to amass large amounts of consumer data for the first time. So think about a restaurant chain that had a wonderful offline business, mostly cash, for 20, 30, 40 years, suddenly having tens of millions of credit card numbers. That's a trove that is very, very valuable to criminals that restaurant chain may not be very well equipped to defend.
So at this point, does it also have to do with size? In other words, there are a lot of smaller businesses out there that maybe can't invest in the technology, and you point out restaurants as part of it. But some of the bigger guys, I mean, we saw it today with Marriott, they're vulnerable as well.
I think it's the big problem is that the value of what every business, whether it's large or small, is amassing in the form of credit cards, consumer information, first names, last names, and so forth, is beginning to exceed the value of the investment. It's hard for any business to be able to invest at the level that's necessary to keep out these very, very specialized criminals.
Before we let you go, I mean, we don't have a whole lot of time, but, you know, people are watching tonight saying it's happened again. Is security realistically just an illusion?
I wouldn't say that it's an illusion, Bill. I think that we're making lots of stride forward. There's a lot more work to do. And sure, we are hearing about the pace of these kinds of breaches more and more. It's unfortunately increasing. But the solution is there. And I think we are going to see an improvement as everybody becomes more aware of and able to deal with these kinds of breaches.
Sumit, thank you very much. Always a pleasure to have you with us. Sumit Agarwal with Shape Security.
A golf company takes a big swing, and that's where we begin tonight's market focus. Callaway Golf is buying outdoor apparel company Jack Wolfskin for more than $470 million. That deal aimed at helping the company expand further into the active lifestyle market. But investors were less than impressed today. Shares of Callaway fell 9% to $17.13. Federal investigators are reportedly questioning former General Electric employees about its legacy insurance business. That's the same unit that led to accounting problems at the company that they disclosed last year. And according to the Wall Street Journal, those staffers say some risks were ignored. Shares fell another 5.5% today to $7.50.
Laboratory Corporation cut its full-year earnings guidance. The lab services provider cites a decline in hospital referrals and a fall in volume from certain managed care plans. The shares fell nearly 10% to $145.64. Honeywell plans to move its headquarters to Charlotte from New Jersey. The decision comes less than 5 years after getting a $40 million tax incentive credit to stay in the Garden State for 15 years, although Honeywell does say that some employees will remain in New Jersey. The shares were up a fraction to $146.75.
This week's Market Monitor likes financial technology stocks that she says will benefit from increased consumer spending. Now, last time she was on in February, she recommended stocks whose performance has been mixed. Joining us once again tonight, Marianne Montaigne, portfolio manager at Gradient Investments. Marianne, welcome back. Good to see you.
Thank you. Thank you.
We're heading into the holiday shopping season. Everybody's making payments. Electronic payments are very big these days, and you like these these companies that do the processing. For example, Visa. Why do you like them in particular?
Well, Visa is actually a stock we've held for a long time. They're a global payment processor. They've been growing at the top line revenues at about 12%, and this last quarter earnings by about 34%. And they're getting more and more leverage, more and more cost controls in their systems, and they actually guided higher. So this is one that sells at a price to earnings ratio versus growth of about 1.7 times, but we still like it. We still see 15 to 20% upside in this name.
You also like MasterCard, which you say has a history, a good history of beating earnings estimates, but you think it has 20% upside to your target price. Tell me more about why you think it can achieve that.
Right. So last quarter, they reported revenues up about 15% and earnings also up 34%. This has a better PE to growth ratio of just 1.0, and they're very low on debt, and no debt for that company. And we just see more and more payments processed, more and more overseas payments processed, and just everyone just gearing more toward paying by card just around the world.
And then PayPal, which really symbolizes the future of electronic payments and so forth, especially since they own Venmo now as well, right?
Right. So PayPal is really benefiting from all these online payments. And if you look at the numbers for Thanksgiving weekend online, whether it was mobile or at home on a PC or laptop, the transactions were up 28% over Thanksgiving weekend. So the online portion is taking more and more share, and this is where they benefit the most. This is another one that trades at just 1 times their growth rate on earnings for the next 2 years. So we see about 20% upside in PayPal. We just like that whole fintech space.
I see that, yes. Marion Montaigne with Gradient Investments. Good to see you again. Thank you for joining us tonight.
Thank you.
And to read more about Marianne's picks, you can head to our website at nbr.com.
Coming up, dialing up the heat. A hot startup that wants to keep your coffee steaming. Here's a look at what to watch for next week. On Monday, we'll find out if auto sales got a lift from early holiday promotions. On Thursday, members of OPEC may face their biggest test yet when they meet to discuss oil production policy. And on Friday, the government releases its monthly employment report, a release that the Fed will be paying a lot of attention to. And that's what to watch for next week.
The price of iceberg lettuce is soaring. According to the Department of Agriculture, a carton of the popular salad ingredient rose as much as 165% in just a week after romaine lettuce was pulled from shelves because of an E. coli outbreak. Now, the report said the sudden demand for iceberg, coupled with light supplies, led to that price surge, and the price of other lettuces followed a similar pattern.
It seems everything is going high-tech these days. Cars, homes, even toys. Well, now you can add coffee mugs to that list, and the company behind this clever cup is growing very quickly. Jane Wells has our story tonight.
This is an Ember Smart Mug, an $80 coffee cup with a battery attached to an app where you set the temperature for your coffee and it holds the temperature for over an hour. No more cold coffee. Investors include Joe Jonas.
Hot coffee is a big deal. I'm Clay Alexander. I'm the founder and CEO of Ember.
Clay Alexander is a lifelong inventor whose office has an old Alexander Graham Bell telephone and an original Thomas Edison phonograph. Here's how he created Ember.
It was 2009. I was sitting there in my kitchen having scrambled eggs with my wife, and I had just sold my light bulb to GE. The reason that's relevant is that I had come off of about 2 to 3 years of thermal science engineering. And so when my eggs got cold, I thought, okay, I gotta fix this. Like, this is the 21st century. Like, at a bare minimum, my plate should be able to keep my food at a decent eating temperature.
Alexander worked on the technology for years before turning his focus to coffee mugs, launching in Starbucks at the end of 2016.
I like the long game, and I feel like that's also really important, is to be patient.
If I were to say annual revenues top 10 million, would I be wrong?
No, you are not wrong.
Am I way off?
We're doing really well.
The company is valued at $140 million and projects profitability by the end of next year, with plans for an IPO or to be acquired. Its cups and travel mugs are sold not just in Starbucks, but now in Apple stores. And what's next?
We plan to go from here into self-heated dinner plates, and we have a baby bottle that we're launching, which will heat the milk or formula right up to body temperature within 5 minutes.
Ember is going to do some groundbreaking stuff. I can't speak about everything, but what they've been working on in their technology, it's unbelievable.
An investment the Jonas Brothers hope is their latest hot hit. For Nightly Business Report, Jane Wells, Westlake Village, California.
I am a fanatic for keeping my coffee hot.
I know you are.
This is right up my alley.
And it's almost Christmas.
Oh, gee.
Oh, gee.
I'm glad you thought of that.
What an idea.
Yes. Before we go, let's take a quick look at what happened on Wall Street today as we close out the month of November. The Dow rose 199 points on that optimism over the trade talks between the U.S. and China this weekend. The Nasdaq added 57. The S&P 500 was up 22. And believe it or not, the major averages did finish this volatile month with gains because of those big rallies we saw, especially on Monday and Tuesday.
Yeah, that's unbelievable. Yep. That'll do it for us tonight. I'm Sue Herrera. Thanks for watching. We'd like to remind you that this is the time of year your public television station seeks your support.
I'm Bill Griffith, and we do thank you very much for that support. Have a great weekend, everybody. We'll see you on Monday in December.
I know, right? December.